Tesla stock went crazy today, and for good reason. In the video put out last night titled, "I can't believe Elon Musk just said this about Tesla stock," Elon Musk actually shared a post about demand being essentially off the charts for Tesla. And nobody paid attention. I mean, look at the comment section of that video. Bear after bear after bear dismissing what Elon was saying, but apparently not everyone did. The stock is up at the time of recording this video, at least north of 7%. They're taking this seriously. Now, it's not all about just what Elon said. There was some positive tariff announcements as well, but I don't think that's the biggest reason why Tesla is doing so well. There is news today that the new Tesla Model Y inventory is now completely sold out in Texas, Michigan, Ohio, Illinois, Georgia, Utah, Virginia, Alabama, South Carolina, North Carolina, Tennessee, Mississippi, Arkansas, Kansas, Missouri, Kentucky, Oklahoma, Indianapolis, Iowa, Nebraska, Hawaii, Wyoming, South Dakota, North Dakota, Montana, Idaho, Wisconsin, Maryland, and Delaware. So essentially, Tesla is selling the old Model Y. They're selling down that inventory, and it's sold out now in 29 different states. If Tesla was having this big demand problem, that would not be happening. You would not be able to sell out of your older product line. Can you imagine what the new Model Y demand likely looks like? I mean, I would argue it's massive if you can get rid of inventory this fast. Now, if you watch this channel, you're not super shocked by this. We've talked about this before. We look at the global inventory data for Tesla almost every single day. And, the Model Y has really never been this low before. I mean, it is kind of hard to see, but the Model Y's other lowest point was 2,600. Today, you're at 1,700. I mean, you've never been this low before. So we've been calling this out as a reason to potentially be bullish on the stock. Because really, the fact of the matter is, the quote-unquote demand concerns for Tesla have been far overplayed. There was never really this demand problem to begin with. We know this because there wasn't really any discounting, okay? If Tesla has a demand problem, they will start to discount. They will, sacrifice margins to sell vehicles, because what's the alternative? If you don't have good demand at a specific price point, then you start to build up a lot of inventory. Inventory is a direct correlation to demand. Now, yes, let's be fair. The headlines were true. Tesla's deliveries slowed down 45% year over year in January of this year. But context is key. In January of 2024, Tesla sold 18,000 vehicles in Europe. In January of 2025, Tesla sold 9,000 vehicles in Europe. It was a 9,000 vehicle difference. It's not a 45% drop on, hundreds of thousands of vehicles, right? It's very small. And that was the, again, transition to the new Model Y and basically shutting down production of Teslas in that region, okay? China experienced this, likely the US experienced this, and it's going to make for a weak Q1. And Tesla falling 50% priced that in. Well, now, lo and behold, Wall Street's starting to figure out exactly what we've been talking about for a while. And they're coming to the conclusion that maybe Tesla's a good buy now that the stock is down 50% and the fears were overblown in the first place. And that's what we've been talking about as well here on this channel. And that is why I have been strategically buying Tesla, not going all in. I bought a bigger chunk around 220 because that's just crazy to be at in general. But I do still think there is a recession risk this year. And you want to have some dry powder on the sidelines in case we do start to slip into some kind of recessionary dynamic. And before we get into the rest of your Tesla stock news today, option activity, what the short sellers are doing, and more, we do have some news that Donald Trump is going to be even more flexible than we thought on these reciprocal tariffs on April 2nd. And this was the news today that really boosted markets in total. It says here, Trump has said the tariffs are aimed at any country that imposes duties on U.S. imports, but the Wall Street Journal reported the tariffs are expected to be more narrow in scope and will likely exclude some industry-specific duties, citing an administration official. Trump will also exclude some nations from the tariffs. Both the Wall Street Journal and Bloomberg News reports noted that the situation remains fluid and that plans could change. Trump seemingly lowered the temperature for investors on Friday after he told reporters there could be potentially flexibility for his reciprocal tariff plan. So, I mean, when you look at this just from face value, there's not a lot of clarity provided there as well. I mean, you could exclude a nation, you know, in Africa or in South America that we do very little business with, like, you know, are we excluding Mexico here? Like, that would be a bigger deal. Are we excluding Germany here? That would be a bigger deal. Okay, what about Canada? Well, doesn't seem likely as of right now. So we have no idea what that actually looks like. The reason I believe markets are taking it positively is, one, it could be less pressure on inflation. But I think the real thing here is it's less potential disruption to the economy. You can see this via TLT today. The TLT is down about 1%. So that means treasury yields are actually rising. Okay. So if smaller tariffs or more targeted tariffs mean less inflation, well, TLT would fall on that. It wouldn't rise. TLT is rising today because we're not as focused on the inflation side. Wall Street's saying this is better for the economy, that growth will, you know, pick up again. And that's kind of the trade-off here. So it's fascinating to see the bond market does not care about a smaller tariff, you know, reciprocal tariff date or package, if you will, on April 2nd. In terms of inflation, they actually think it's better for the economy, which is maybe not what some people had expected. We also did get some economic data that came out today. Chicago Fed National Activity Index came in at positive 0.18 versus last month at negative 0.08 and the forecast of positive 0.08. So better than expected. Chicago Fed National Activity Index. S&P Global Composite PMI came in at 53.5 versus estimates of 51.5. So that was better than expected. S&P Global Manufacturing PMIs came in at 49.8. That is worse than the expected 51.8. So that was worse than expected. And Global Services PMIs came in at 54.3 versus estimates of about 51. So services came in a little bit on the hotter side after they fell to a 15-month low last month. Now, it says that service sector output rebounded strongly after hitting a 15-month low in February, driven by improved business inflows, strengthening consumer demand, and better weather conditions. However, exports remained a weak spot, declining for a third straight month. Employment edged up in April, reversing February's small decline, though job growth remained sluggish as firms hesitated to hire amid demand uncertainty. Input costs surged to an 18-month high, while selling prices saw a modest uptick as businesses kept prices competitive in a weak demand environment. So essentially margins are being hit at companies, but they're not passing those costs on because they have other competitors that are, you know, trying to undercut them essentially. So bad for company margins, maybe good for the inflation outlook. It says, Meanwhile, service sector confidence declined for the third straight consecutive month, hitting its second lowest level since October 2022. Businesses cited concerns over the impact of federal spending cuts, tariffs, and broader policy changes on demand and financial markets. So by no way, shape, or form was this, an A+ report from the services PMIs today, but there were some bright spots and some other areas that make you just kind of shake your head a little bit. Like, are we overreacting a little bit to this good data? Maybe. I think time will tell. Nonetheless, Tesla is now up 9% at the time of recording this video, really just smashing through some pretty important critical levels, but more on that after your Tesla stock breaking news. Look at this. A bunch of people are here in Orlando picking up their Teslas, and it looks like they have a light show going on. And you can see everyone pretty amazed by this. Also in the news today, which could be boosting Tesla's stock, it says Tesla's Giga Berlin factory has increased its localization of suppliers with the recent switch to the new Model Y, with 92% of components now coming from somewhere in Europe. Quote, "This makes us even more resilient to disturbances in world trade." So Tesla's kind of distancing themselves from some of the prior statements that they made that the tariffs would also impact Tesla. They say, at least in Europe, they should be pretty tariff resilient. And you can also see an update from Tesla's diner. It looks like things are coming along nicely, but construction still is underway. Tesla has also released a Cyber Quad, again for kids, that is back in stock for the first time in a long time in the US for $1,650, powered by a lithium-ion battery with up to 15 miles of range and a 500-watt motor with a top speed of 10 miles per hour, LED headlights, and taillights as well. Elon Musk wrote on X that many of these doing these, quote, takedowns have also sold Tesla stock short, so they benefit financially from a drop in the stock. Now, Tim Walsh, after making comments that he enjoys watching Tesla stock fall, meanwhile, Tesla employs 80,000 American workers, and more so even in indirect businesses. I personally know a lot of people that don't work for Tesla, but make Tesla parts in the US, right? So how many direct or indirect jobs does Tesla employ? Probably hundreds of thousands in America. Nonetheless, Governor of Minnesota, Tim Walz, you may have heard of him before, said that he was actually joking about his comments about Tesla. He says, quote, "This guy bugs me in a way that's probably unhealthy," Walz said, referring to Musk. "I have to be careful about being a smartass. I was making a joke. These people have no sense of humor. They are the most literal people. But my point was, they're all mad, and I said something I probably shouldn't have about a company." Also in the news today, a study found that charging networks operated by Tesla and Rivian have fewer problems than non-automaker efforts. Survey respondents reported problems at Tesla charging stations 4% of the time and 5% of the time at Rivian operating chargers. In contrast, respondents said they experienced problems 48% of the time at Shell recharge stations, 43% of the time at EVgo stations, and 41% of the time at Blink stations. And as I mentioned yesterday, there is a group of quote-unquote traders that are encouraging people to buy $100 strike puts for June 20th, 2025. And as I said in the last video, that is the best surefire way to lose all of your money, okay? This group on Reddit is called Elon Musk Hate, okay? I guess it should be called Lose All Your Money Shorting Tesla because, the stock is up 10% today. Hopefully none of you guys fell for this. Because again, at the time of recording this video, Tesla is now up 10%, really smashing through all of your levels today. Your 250 level, smashed through that. 20-day moving average, smashed through that as well. Even this trend line here that connects the low that you had in April of 2024, connects the low, connects the low, connects the low. Bit of a gap down level we had in early March. Well, you're back up above that now. So as long as this holds throughout the day into the close, that is a very positive sign for Tesla, at least in the short term. Now, ultimately, you want to get above that 200-day moving average at $284 per share. If you get above that, then you open the door to 310, potentially 325 as the next big level. You can also see that's where a lot of volume came in. Back here in November was around 310 to 320, which propelled the stock higher into the 400s. Ultimately, that all-time high at $488 per share or so. So you could get some resistance around that level, but it would be a good sign to see demand come in again where you had the last volume spike. So around 310, if we get demand, that could push the stock into the 330s or so. And that's where you test your 50-day moving average and then your 100-day moving average at about $350 per share. Here on the day-to-day, option activity is incredibly bullish for Tesla. You have 182 different trades totaling $202 million with a positive order value of 80%. You can also see the volume today is 61% calls expiring by this Friday, and volume on the put side is 39%. If we expand this out a little bit, you could start to see a bit of a gamma squeeze if we could hold these levels and not get any really bad news as far as tariffs or the broader markets. If things just kind of remain stable, which I guess is probably too much to ask for in this market dynamic. But you have a lot of volume coming in for Tesla options expiring this Friday. 37,000 at the time of recording this video, volume at the 275 strike, and you still have some time left on the day, okay? 12,000 for volume at the 277.50, 44,000 for volume at the 280, okay? 25,000 for volume at the 290, 45,000 for volume at the 300, and most of these strikes are between 10 and 20,000 for volume between these big ones, okay? So you could start to see a bit of a gamma squeeze here. And I know that sounds crazy, but Tesla's fallen 50% when the actual business has been doing very well. Like, there's not a whole lot to justify Tesla falling 50% this fast. And that could lead to a bit of a snapback in the stock, because when you fall 50%, that means you have to rise 100% to get back to that same starting point. Don't be surprised if we have more of these really good days. Now, I think it's ultimately going to come down to the economic data coming out in the second half of this week. The economic data is really backloaded this week. Wednesday, you have durable goods orders. Thursday, initial jobless claims, some smaller data points. But Friday's your big day. Core PCE, personal spending, personal income. Those are the data points that are actually going to be important for markets and really evaluating, are we going into a recession or is the economy doing okay here? And you can see on the day today, short sellers are scared shitless, okay, covering 2.4 million shares so far on the day today. So some of this move higher in Tesla looks to be a bit of a short squeeze. Now, volume today is already in the area of, 30 million or so? Let's see. 58 million. So 2 million shares, give or take, being covered, doesn't explain this whole move, but it does explain some of it. What's also fascinating about that is Tesla's short interest is already at a very low level. Okay, so you're almost sitting at the lowest levels of short interest ever for Tesla. and they're going out and they're covering even at these very low levels of short interest. Again, the stock is down 50%. It makes sense to cover, especially with a technical breakout like you are starting to see for Tesla. I mean, even with all of this considered, Tesla's up over 10% today. The RSI is only at 48. Like, you're not even technically neutral. You could see a large additional rally from here before you're anywhere close to being like overbought. Okay, so from that perspective, if the economy does not show we're slipping into a recession, there could be reason to be bullish on Tesla for a continued rally. And again, Google Trends data for Tesla, as we've went over on this channel every day since the stock has been selling off, especially we've been tracking this more closely than usual. Your numbers on a quote year-over-year basis are better than they were at this same period last year for most of Tesla's products. For the Cybertruck, it was at 20 last year. Now it's at 24, like this same period last year. The Model Y is at 20 today. Last year it was at 19. The Model 3 is at 17 today. It was at 18 last year. So that's 1 point lower. Not a huge deal. The Model S is at 9 today. And last year it was at 7. The Model X is at 5 currently. And last year it was at 6. So yeah, a little bit of small discrepancies here and there. But overall, the numbers look really good. This is not indicating any demand problem for Tesla. So when Elon says or even shares something that implies that Tesla demand is quote unquote off the charts, that's something you want to pay attention to. That's something that can move the stock, especially when it's down 50% from all-time highs. And hopefully after now, the video yesterday and the reaction in Tesla today, you can see why I pay attention to that. Now, also worth mentioning today, the CNN Fear and Greed Index is recovering a little bit. Today it's at 28. You are now out of extreme fear. You've been in extreme fear for the last couple of weeks. So that is what I would say a positive sign overall for markets. Market momentum, extreme fear, stock price strength, extreme fear, stock price breadth, extreme fear, put and call options, extreme fear, market volatility is neutral, safe haven demand, extreme fear, junk bond demand, currently in greed. The percent of stocks trading above their 50-day moving average, up 4% today to 32.8%. But for the bulls out there, you're still very bearish overall. And what will be interesting this week is what happens with the AI investor sentiment survey. It's been above 50% bears, like near 60% bears, less than 20% bulls for over a month now. Okay. Do you see the bulls start to pick up and the bears subside a bit? What happens coming this Thursday with the new report? So ladies and gentlemen, we have a lot more to get into in the next video coming out at 8 p.m. tonight. We will talk Tesla, where Tesla is going, most likely, again, use probabilities because nothing is a guarantee, depending on what happens this week with economic data and also the tariff situation. With that said, ladies and gentlemen, hit that like button and subscribe to the channel if you have not done so already. It's free, $99, cost you nothing to do so, and these videos may just help you make more money. At the bare minimum, these videos will help you stay informed. No BS. Informed about what is going on in the business of Tesla. And will help put into context what is happening with the stock. Doing both of those things, I can almost guarantee you will come out better ahead than you otherwise would have been. Obviously, nothing is guaranteed. You can lose all of your money in the stock market. Do not listen to anyone on YouTube. Come to your own conclusions, blah, blah, blah. You understand the disclaimers here. Nonetheless, have a great rest of your day, and I will see you in the next one.